Okay, I'm going to demonstrate PA21 on page 95. PA21 on page 95. We're dealing with Lamonda Corporation. It's a job order costing problem. This is one of my favorite job order costing problems because it shows how to get through everything no matter what they throw at you. So starting off, we have Lamonda Corporation. They use a job order cost system. And on April 1st, the accounts had the following balances. Then they have a list of transactions that occurred A through H and some beginning balances as well. I'm only going to go through and get to part 3. Parts 4 and 5 I'll show on the PC through Excel. So starting off, we should post those T accounts on the board. They gave us raw materials, work in process, finished goods, manufacturing overhead, cost of goods sold, sales revenue, and non-manufacturing expenses. So we'll put those on the board now with the beginning balances. But even though they gave us those certain accounts, we're always going to do it our way by putting our own accounts on the board. So we'll start with raw materials. This is one we always use. Raw materials. And they gave us a beginning balance of $25,000. We'll just put that right here. Next, we always want to put our 3 product costs down. Always put the 3 product costs. First one is direct materials. Next one is direct labor. And finally, our overhead account. These are our 3 product costs, essential for all manufacturing. Next thing up, we want to put our work in process account. We're going to call it WIP, work in process. And after work in process, there's finished goods, our inventory account, and this flows to cost of goods sold. And somewhere below, there is a sales account. This is not too necessary, so we'll make it blue. And there's also the non-manufacturing expenses, also known as period costs. And I believe they gave us some beginning balances for work in process and finished goods. Work in process, $55,000. And finished goods has $60,000. And now we're ready to begin. We'll walk through transactions A through H. Starting with A, it says they purchased materials on account at a cost of $136,000. They purchased materials at a cost of $136,000. So right here in raw materials, we'll put the $136,000. Somewhere out there, there's accounts payable. It's being credited. We're not going to worry about that here. All we care about is the manufacturing process. That takes care of A. So transaction B, it says they requisitioned materials at a cost of $122,000, of which $28,000 was for general factory use. Well, if that happens, that means $122,000 came out of raw materials. And of that $122,000, it said that $28,000 was used for general factory use, which means it can't be traced. And untraceable materials means it's indirect, which means it goes to overhead. So that $28,000 of this $122,000 is going to the left side of overhead. Remember the overhead account. Anything on the left side is actual, anything on the right side is applied. Since this is actually known but untraceable, we're going to put it right there. The remaining $94,000 of direct materials requisitioned will be used directly. Raw materials requisitioned directly is $94,000. That's going to go right here. And remember, this account doesn't exist. So it's going to flow right through $94,000 and go straight to work in process. Not bad. That takes care of part B. For part C, it says that there is unpaid factory labor of $155,000, of which $24,000 was indirect. So once again, the indirect labor, the factory supervision, That's going right here in overhead. And the amount was $24,000. $24,000 goes right here. The total labor cost was $155,000. And if $24,000 was indirect, that means the remaining $131,000 was used as direct labor. That's going to go right here, $131,000. And remember, anytime you have something that appears on the right side of your product costs, they're going to go right through to work in process. What happens next? It says they incurred other costs. Well, we got to go through and make sure that they're going to be used in the factory or as a period cost. That first one is a selling expense of $44,000. Since it has nothing to do with manufacturing, it's a non-manufacturing cost, and we can include that in period cost over here. $44,000 is going for a period cost. Next one is factory utilities. $26,000 took place in the factory, so it's a product cost, but since it's not traceable, it's going to go right here in overhead. The amount is $26,000. Next one up is administrative expense. That's the accountant's salaries. That has nothing to do with the factory. We're going to stick that one too in period cost, $15,000. Okay. Next one up is factory rent. That is a product cost, specifically overhead untraceable. You're going right here for $30,000. Next one is factory depreciation. $24,000 took place in the factory, not traceable, also going right here, $24,000. Pretty good. Next one, it says we applied overhead at a rate equal to 135% of the direct labor cost. So 135% is our predetermined overhead rate. They've done the work for us. Estimated overhead cost divided by estimated cost driver came out to be 1.35. So what we got to do is take the 1.35 and multiply it by the actual cost driver. 1.35 times the direct labor cost. So 1.35 times 131,000 is what's going to go right here in the applied side for overhead. 1.35 times 131,000 should get us 176,850, I think. 176,850. I think that's right. Remember, overhead account, the left side is the actual side, the right side is the applied side. The applied side means the predetermined overhead rate times the actual cost driver. And because it's on the right side, this is also going to flow right up here to work in process. 176,850. Not too bad. After that, part F, it says we completed jobs costing $375,000. If we complete jobs, that means it's going out of work in process and into finished goods. $375,000 got finished, and this is going to flow to finished goods. And secretly, whatever comes out of work in process and goes into finished goods, they call this the cost of goods manufactured. That's what that number is right there. Next, it says that they sold jobs costing $402,000. If they sell jobs costing $402,000, that means they went out of our inventory finished goods account and into cost of goods sold. So $402,000 is going out of here and into here. Not too bad. That takes care of that. And then it finally says we recorded sales revenue on account of $500,000, and that we can put right here. It's not too essential yet. But right now, the manufacturing process is done. The last thing we need to do is total up what all these account balances are. So starting with raw materials, we start with 25. We bought 136 for a total of 161. minus 122 should give us 161 minus 122. Is it 39,000? Yeah, 39,000 is left over. Direct materials we don't care about, 0, 94, 94. Direct labor we can leave B2, but this one here with overhead, this one creates something strange. Actual, applied. We got to see which side wins. The total applied is 176,850. The total actual is going to be 28, 24, that's 52, 78, 108, 132,000. There's 132,000 of overhead on this side. 132,000 on this side. This side is 176,850, so it looks like there's 44,850 on this side right here. 44,850. And if we remember, if there's too much on the actual side, we call that under applied. If there's too much on the applied side, we call that over applied. We'll get to that in just a second. Work in process is next. Here's our current manufacturing costs, materials, labor, and overhead. We started with 55,000. We added 94 of materials, 131 of labor, and 176,850 was applied overhead. We finished 375,000, and that should leave us with, let's see, 55, 94, 131, that's 186 plus 94. 186 plus 94 gets me up to 280,000 plus 176. 280,000 plus 176 is 456,850. 456,850 minus the 375. 456,850 minus 375. Is it 81,850? Better check. What did we say? 55,000 plus the 94,000 plus the 131,000 plus the 176,850 minus the 375,000. Yep, 81,850. 81,850. Okay, finished goods. We had 60 to begin with. We manufactured 375,000 and we just sold 402, which should leave us with, I believe, 33,000? Yes. All right. And then period cost below here, this is a total of 59,000. Not too essential yet. Find this overhead account. We got to deal with that. Now, there's 44,850 over applied. That's going to lower cost of goods sold. Don't worry about getting the two mixed up. It's real easy to figure this piece out. Notice, if there is 44,850 on the credit side of overhead, we must debit to get rid of it. If we debit overhead, that means we must credit cost of goods sold for 44,850. And because we credit this expense, it's going to lower the expense. 402,000 minus 44,850 should get us down to, dang, what are you going to be? 357,150? I believe so. $357,150. And there's our true cost of goods sold. Now, there's no question they can ask you that'll fool you. Did we do requirement 1? We posted those transactions. We got them right there. Number 2, we computed the ending balances. And number 3, we computed the over or under applied manufacturing overhead. That's right here. Actual minus applied. Applied 1, so we're 44,850 over applied. And if we get rid of it, it's going to lower cost of goods sold. If you debit this, you must credit that. If you credit this, you must debit that. I used black as the standard color. So this is what we're taking out. Since we debited, we credited cost of goods sold, and it went down. Now, as far as part 4 and 5. I'm going to show that in Excel to keep things nice and organized. But for the most part, this is all we need to know for job order costing. No matter what they ask, always set it up like this, and you cannot be fooled by anything they ask you. Stand by for the Excel document.